So ladies and gentlemen, welcome back. We will dive into session 4. It's on future of platinum in Asia. To chair this session, I call upon Mr. Weibin Deng. He's the regional head of Asia Pacific of World Platinum Investment Council. A round of applause, please welcome Mr. Weibin Deng. Joining him on the panel discussion are Mr. Trevor Raymond, who is the CEO of World Platinum Investment Council. Welcome, sir. Mr. Bruce Ikemizu is the representative director of Japan Bullion Market Association, and Mr. Gregersen, who is the founder of Silver Bullion. This session will be for 40 minutes. With this, I request Mr. Weibin Deng to take over from here.
Distinguished guests, colleagues, and visionary of the precious metal communities, warm greetings. It is an honor for me to host these pivotal sections on platinum group metals at a time when the precious metals are rewriting the rules for global industry and investment. I think we are stand amid an exciting rally. Platinum price have just sold 40% in 2025, and then breaching 1,300 ounces lately. This is a high unseen in recent years. This isn't speculated fancy. I think it is a structure recalibration for continuing deficits and also the demand growth in investment and the jewelry. So the rally is more than a price spike. It is a recognition of PGM as a strategic asset in a decarbonization world. But challenge still remain the mining disruption and also the recycling gap. So as we convene today, let's harness these momentums and let's collaborate to secure PGM as the bedrocks of sustainable growth for the futures. So our first speaker will be Trevor Raymond, CEO of WPIC, followed by Bruce, representative directors of JBMA, and also Greg, the founder of Silver Bullion. Let's have a welcome to Mr. Raymond.
Thank you, Weibin. Good afternoon, ladies and gentlemen, distinguished guests. It really is an honor for me to be back in Singapore and to be able to speak to you today. I think particularly because of the significant interest that's been shown in the platinum market recently. There are two key aspects of what we do at the World Platinum Investment Council, and one of those is to provide investors with insights that they can act upon. And in recent weeks, there's been huge demand for those insights. And this follows, as Weibin mentioned, what's happened in the market, and it appears that the market value of platinum is undergoing a long overdue correction to reflect this market that is in structural deficit. Let me try and unpack for you and explain a little bit of why that might be the case. If we just look at the price performance of platinum through 2025, if you look at the chart on the left and you look at the first quarter, platinum's performance sat in the middle of that group of metals. And that really is typical of platinum straddling both being a precious metal and an industrial metal. But if you look at from the end of quarter one into quarter two, platinum has performed quite exceptionally against all metals and even against stellar gold. But more interestingly, if you look at the chart on the right, and that's the performance this year over the full 5 months against other asset classes, and there platinum has outperformed other asset classes, US equities, global equities, commodity indexes, and certainly the dollar. But that's gone largely unnoticed, and the reason for that is over the past few years, platinum has been at a very low price level, and it failed to respond when gold went to all-time highs, and the price has also been range-bound. And I think, to use the technical term, platinum has very much remained very unloved. But it seems that investors have noticed, and there's more investors that are trying to grapple with why the investment case for platinum is looking quite compelling at the moment. And let's just turn to that investment case. So there are the 6 factors that are really all strong drivers of why platinum should provide positive returns for investors, and that is investors looking at various time horizons, short, medium, and long term. If we just look at the chart on the top left, as we can see, this is about an 8 million ounce market, 8 million ounce a year market. And this is the third consecutive year of a deficit of almost 1 million ounces. That is really a significant deficit in any market. What we can also see on that slide is the line that represents above ground stocks. So as those deficits have occurred, the market had to clear and draw down from those above ground stocks, and they then are heading down towards zero in 2028. At the moment, there's about 3 to 4 months of demand in above ground stocks, and in commodity markets, if the stocks are anything less than 6 months, it's agreed that it's completely unsustainable. So we've got a level where there's been these deficits, unsustainable, but the price hasn't moved. And what we think is happening is that the high lease rate is because people that own the metal are quite comfortable to lease it out at a good lease rate, but they're certainly not prepared to sell it because there's a shortage of supply. So those lease rates have been providing metal, which has probably been why the price hasn't gone up until recently. The chart in the top middle, that shows the EFP rate, the exchange for physical rate at the top, and that's been attracting metal into the NYMEX futures market due to fears ahead of the US tariffs. But the bottom yellow line is far more interesting. That is the OTC market, which is in backwardation. And we know backwardation is a strong indication of a market in shortage. The top right indicates supply, and of this 8 million ounce market, typically 6 million come from primary mining and 2 million from recycling, mainly from auto catalysts when vehicles reach the end of their lives. Now, that auto catalyst supply has dried up with the global turmoil that we've seen over the last several years. People are certainly driving their vehicles a lot longer, and as a result, there's far fewer end-of-life vehicles providing those scrap catalysts. So recycling supply is heavily down. Mine supply is down, and we know that the mining companies produce all 6 platinum group metals, and that the price of palladium and rhodium came down from very, very lofty highs. So the margins are quite tight. They've cut capital programs. They've made over 40,000 people redundant. And as a result, that mining supply is still completely constrained. On the bottom left, we have a look at automotive demand, and that's one of the largest demand sectors in platinum. And people made the assumption that the switch to battery electric vehicles meant that there would be no need for internal combustion engine vehicles, no need for catalysts in the auto catalyst on the vehicles. But that's proved not to be so. It is going down, but it's a very slow decline of about 1% CAGR. And what we've also seen is the slower adoption of BEV certainly has increased that, as has the proliferation of hybrid vehicles that are CO2 efficient. Middle chart on the bottom is jewelry, and jewelry in platinum has been very, very quiet for several years. First quarter of 2025, overall, global jewelry was up 9%. And the standout there was China at 26%, and I'll come back and give you a bit more detail on that shortly. But if you look at the one on the right-hand side, that is India, down 20% for 2 reasons. One, India had a fantastic year last year, and 2, a lot of the production of platinum jewelry in India goes to the US market. And with the introduction of tariffs, that flow from India to the US dried up quite quickly, especially in the first quarter. And then on the bottom right, it's always intimidating to come to a gold conference and talk about platinum. But the catch-up trade certainly is valid. If you go back 100 years, typically platinum is always traded at about twice the price of gold. And now you've got platinum that's been at a discount to gold for many, many years. So I think what's happening now is part of that as well. Moving on to look at what's going on in China, and I think that taps into the theme of this particular session. Where is demand growth headed, and what will happen to PGMs in the Asia region? So what we do know is that buying out of China has typically been fairly price sensitive. And if you look at that blue line, that's the flow of metal purchases on the Shanghai Gold Exchange, or the SGE. And typically as there was price weakness, they'd be buying strength and vice versa. And a lot of that would be the automakers, and if they did pull out of the market, it would be for a few days because they're in the market every single day. But what we saw in quarter 1 was that the prices were flat, firm, and in fact slightly increasing, and there was this massive increase in buying on the SGE, and you can see that inside the dotted line. In fairness, as the price in recent weeks has spiked or gone up more steadily, Buying has come down a little, but certainly that does appear to be just the start, and I'll give you some more detail on what that buying has been supporting in China. The first is jewelry, and this is quite an unexpected development because what we found is that medium-sized gold jewelry companies in China found that gold jewelry sales were down 32% in the first quarter. Their balance sheets were extremely stretched in terms of inventory costs at the high price of gold. So what they did is they sold some of their gold inventory, took some profits, and took that money and invested into, firstly, finding somebody to manufacture platinum jewelry, deciding on a range of platinum jewelry to be manufactured. They leased a showroom. They filled the showroom with stock, and they've started selling that material. Now, there were about 10 examples. The one on the far left is a 1,000 square meter showroom just dedicated to platinum with about $12 million of stock. That product is available and it's being sold to the retailers who typically come in from the regions and buy gold jewelry from the same companies. So this is quite an unusual development, but certainly a significant amount of metal that's gone in. And we've seen suddenly the key opinion leaders and some of the social media commentators switching from recommending gold jewelry to platinum jewelry. The other thing that's giving those gold jewelry companies confidence is the increase in the price. That certainly helps them not take a risk on stock levels. And also the Guangzhou Futures Exchange, which is due to launch platinum futures shortly, will enable those companies to hedge some of that price risk. The second reason for China importing all of that platinum is investment demand. We've had an office in Shanghai since 2017. Weibin and his fantastic team in Shanghai have been working tirelessly to develop that market, to actually develop the entire value chain, make sure that any stumbling block is undone. So from 2019 to 2024, we increased the investment bar sales from 20,000 ounces a year to over 220,000, and we're expecting a lot more this year. If you look at the red line on that chart, it's the percentage that China comprises of global platinum bar and coin sales, and that's gone from 10% in 2020 to over 60% forecast for this year. So that's another strong component. We continue to make more and more investors aware of platinum as an investment, and those bar sales are sort of rapidly growing. We have 13 partners, and there's been a whole lot of partners that have joined over the last 6 months. Not partners, but new participants. And then the last effect is, I'm just mentioning Shanghai Platinum Week, and that's in the second week of July each year. And why it's relevant here is that this is the 5th one that's upcoming in a couple of weeks' time. And the interesting thing was last year, although there were 500 delegates at that conference, on day one there were 470,000 people online, and those people were online for on average 7 hours and 21 minutes. And the reason is what predated Shanghai Platinum Week was that we found that by getting anybody that had anything to do with platinum group metals in China together, the networking made some fantastic things happen at least. So if somebody is supplying a component into a fuel cell vehicle, they can look at platinum as an indicator of how that development is happening. The nice thing is every one of those 470,000 get exposed to platinum jewelry and platinum as an investment. So we think the group of people that are looking at platinum in China are significantly larger than they were 5 and 6 years ago, and we think that's another strong indicator for driving further demand growth. So that's all from me, and I'll hand you to the next speaker. Thank you very much.
Hi, good afternoon, everybody. I'm very happy to be back in Singapore at this time of year, every year actually. This is the 8th year I come here, and happy to see 600 people, not in this room, but a very good participation for the conference itself. Okay, I just want to speak. This is very short speech, and I just want to make a short presentation about what is happening now in platinum market, because I was in London for the London Platinum Week in May. And as soon as London Platinum Week starts, the platinum started to rally. And that was really impressive. But last year, same thing happened. But the rally didn't really last too long. But this year, as Weibin said, we saw $1,300 on Friday, and now we are around $1,250. While gold is a little bit going down, the platinum is going up again. So I've been saying platinum comes back, and platinum has been very, very cheap these past years at the investors' seminars. And I'm very happy now, these 2 weeks, that platinum coming back. And now from year to date, platinum is performance is much better than gold now. So I think lots of people are happy about this. Okay, what is happening? Let's see. This is just as I said, year-to-date performance of all 4 precious metals. Platinum went up to 42% until last Friday. And it went down a little bit, but still the 35%. Gold is 30%, and then silver comes next, 29%. So this is really a kind of shocking change, if you look at the precious metals market past several years. Platinum now comes over gold. Then I've been saying at those seminars that you can trade platinum in the range-bound trading. You can buy 900 ounces, $900, go long, and then 1,000 ounces, $1,000, you can take profit. Actually, I could do it with the ETFs for several times this past 3 years. But one thing that I told strongly to the investors that don't start your position shorting at $1,000 because the risk is going up platinum is quite huge, and the risk platinum going down below 900 is almost nothing, I thought, So my trading advice is always going long first, and then take long liquidation at 1,000. But now, this time, we are farther away from 1,000 ounces, and I think we have completely broken this trading range. And the reason this time is a big difference from other, past rally is that this liquidity. We had a platinum swap rate is like 20%, 1 month to 3 months. Minus 20%, which means like 25% in leases. And Friday, it came off about 5% lower, but still, I hear people are borrowing platinum 1 year on swaps, so minus 5%. So that means people are borrowing platinum 1 year, paying 10% interest rate. This is really special, something special. I've never seen this. And whenever we had a spike in the lease rates, it's very short-lived, and it's very short-term period. But this time, people are still willing to pay minus 5% to borrow 1 year platinum. So I think this will continue this will not be a short-lived rally, and we probably see higher platinum from here as well. Because you see, what I've been saying is comparing to gold, platinum is too cheap. One time it's 1/3 of the gold price. And we had this, spectacular rally this past 2 weeks, but it is still like $2,200, cheaper than gold. So I'm still saying to the individual investors in Japan that you should keep accumulating platinum long positions and don't sell it this time. You should keep it. I will talk about Japanese market later on.
Okay, so thank you very much. I've been asked to talk about platinum. It's something that we are selling a little bit of, but it's indeed getting quite exciting. So I thought to give you a little bit of an idea what our clients see in platinum and what kind of clients actually buy it and why. So, when I grew up, there used to be a platinum class, which was the top. There used to be a gold class, and then there was a silver class. And recently I had to sort of come up with some naming for something, and I thought, well, it's kind of hard to put platinum on top if gold is 3 times more expensive. So things have definitely changed. And I always like to compare a metal to gold. So the gold-silver ratio is something I always talk about, and the gold-platinum ratio is also something very interesting. And you can see here from 1971 how it really was something that sort of stayed in this relatively, I wouldn't say narrow, but relatively limited sort of range. And it just has sort of bounced out of that. And it went up to 3-to-1 essentially. And that is something which I think in the history has never been like that. Platinum is 30 times rarer than gold, according to Wikipedia. And the fact that it should be 3 times cheaper than gold is surprising. So the type of clients which are interested in buying this, they tend to be quite sophisticated clients. Oftentimes they're coming from the mining industry because they do understand that there are supply difficulties, that it's just a metal which has not been loved very much, and at a 3-to-1 ratio to gold, there's not a whole lot you can do wrong. And it's my understanding that quite a lot of production, if it goes below 900, it really doesn't make sense to keep the machines running. So I don't think platinum can go much lower than this, and compared to gold, it's just very, very inexpensive. So what we've been seeing is recently we had this price surge, essentially, and when something starts moving quickly, people start taking notice. So we have about 4 times more sales in June compared to May in platinum. Now, that's based on quite a low base. If you look at our precious metal holdings from our clients, platinum is about 1.5% of what they're holding. So it can increase from a low base, it can go up pretty quickly. But what I noticed, not only are our average order up 4 times, we're starting to get larger, substantial orders in. So we received orders in the $3, $4, $5 million range now. There seems to be multiple coming in. So in a tight market like platinum, at least on the physical side, that's kind of unusual. So this story is starting to spread, and I myself am tempted to buy platinum now. What you see here, this is from our company perspective. I just kind of showed you how our inventories in platinum have been developing. So we started off with about 5,000 ounces of platinum. Again, it's really quite little. But it's sort of been growing to about 18,000 ounces. We have another 2,000 ounces. So we're about 20,000 ounces of physical platinum that we're storing for clients. And that means we're about 3.5 times up from what it was back in 2020. Now, the interesting thing is about this is that the orders we're seeing now might really be spiking this up a lot more quickly. And 1.5% is in platinum, but I think we're starting to get clients which are starting to say, wait, maybe I'm going to sell a bit of gold and I'm going to buy platinum. And if platinum goes back to 1.5 to gold, I switch back into gold and I get more gold. And so I'm sort of becoming fearful now that our problem will not be selling. Our problem is finding the platinum, because we just received an update today as we're checking with some of the bullion banks that the lease rates are 28%. Now, we don't use the lease rate, we buy it outright, but it's sort of an indicator that indeed there's quite a bit of movement happening in the platinum, and I think it's better to buy today than tomorrow in this case. And just to sort of top it off, I thought to mention one of our new programs, which is essentially making platinum fungible. So we have a belief to always provide ownership of metals to clients. And so what we're essentially doing now is that we have a fully allocated sort of system where we have precious metals in the form of platinum. And we have clients who can buy portions of that, and they're being assigned a specific portion of the bar. And it's a system which is always allocated 100 or plus % in this. In the context of this presentation, the way it looks, we'll probably be needing to source platinum very soon. And that really seems to be constrained, because all we found in the market after initial search was about 20 kilos of available platinum. So it's an interesting time for platinum. Thank you.
So thank you very much for our three speakers. I think I have a couple questions for each of them. So my first question will be to Trevor. So I think people in the market still have a question mark about China demand for the jewelry and for investment. Do you think this is sustainable in the futures?
Thanks, Weibin. I think one of the points that Bruce raised in London during London Platinum Week was the fact that the price moved, and I think what was different is that Weibin actually came across and could actually give first-hand experience of what was going on in China. And I think the jewelry resurgence was completely unexpected. I think the fact that the gold jewelry companies had already done all of this before it became apparent. We opened a liaison office in Shubai in Shenzhen in 2023, and that has really led to a significant number of additional people making platinum investment bars. And I think that gave these gold jewelers confidence. And many of them recall, 10, 12 years ago when 2 million ounces a year of platinum jewelry was being sold in China, and a lot of them had their early successes in platinum. So I think that residual brand awareness in China is extremely high. And the other thing is that these gold companies are selling this to their retailers, who quite recently have been obviously buying gold jewelry from them. And they understand the clientele that is buying often 24-karat gold jewelry in place of a gold bar, and almost treating it as wearable savings. And the key to that is the buyback. Those gold jewelry companies will buy back that gold jewelry at very close to the spot price. Now, platinum jewelry in China hasn't had that benefit for many years, so the buyback has almost disappeared, and the discounts were massive. So I think the gold jewelry companies realize how important buyback is, and as a result, they will buy the platinum back, and particularly, as Gregor is saying, you can't get hold of the metal at all. So I think this will rebuild the trust in that segment, and also certainly make it sustainable. I think because platinum jewelry has been declining so badly for so many years that no one really wants to believe that this is sustainable. So I think we'll have to wait and see, but I certainly believe that it's got legs. And then the other part of your question was investment demand. I think the fact that we've grown that significantly, and there's a huge number of new entrants in the market and more awareness, I think the investment demand growth has also got legs. Thanks, Raymond.
Thank you, Trevor. And also, I would like to ask Bruce, what is the investor sentiments in Japan for platinum?
Yeah, well, before I reply to that question, I want to say one thing. I think the trigger, the direct trigger of this rally was the first day of the London Platinum Week, and WPIC's quarterly report, and also your interview with the Bloomberg about Chinese buying. I think at that news, people rushed to buy the platinum. Anyway, so this rally is really, you are the cause of this rally.
No, it's not me, it's the China demand, actually. I just tell the truth.
Right, okay. Japanese market, it's definitely a gold market. And we have a very good gold accumulation plan. Also, we have platinum accumulation plan. I talked to some of the players. The platinum's percentage in comparison with gold accumulation plan is like 5-1 or sometimes 10-1, so sharply lower than the gold. But some of the players is just these 2 weeks saying that they saw very good profit-taking selling. But now they are seeing very good flows into the platinum accumulation plan. So I think this may change the long story. I mean, people accumulate gold and they won't sell, but accumulate platinum. But platinum accumulator tend to sell when it rallies. Yeah, but I think they are changing their style to more like gold. They want to hold the positions longer time.
Thank you, Bruce. I think thank you for the presentation. You showed us about the progress of the platinum stargram. So I can skip the first question. My second question for you would be, what are the challenges and the opportunities for platinum jewelry and investment demand in the Asian market, in your view?
So what I found interesting is when a metal goes up, usually the demand for that metal from investment side tends to go up because it gets exciting. But then at the same time, on the jewelry side, I understand the demand starts going down. And so I think Silver Institute was recently showing some numbers about silver really becoming very popular now because the price of gold went so up. And before the conference, I contacted one of the big jewelry resellers here in Singapore with the group. And I asked the CEO, hey, how is your platinum demand? What are your plans? Are you selling more of it? And he was essentially saying, yes, they're looking at developing new platinum jewelry because gold went up so much, and it's something that's becoming more interesting. But he also mentioned that supply is not always that easy to get. So the rise of gold definitely made silver and increasingly platinum now something that's more interesting for the jewelers. From an investment point of view, what we've been seeing is a big concentration of gold, which I think is a typical sort of behavior that we're seeing in a bull market anyway. People buy gold, and then they go, oh gosh, I should have bought it when it was 1,500. Now it's 3,000. Now it's 3,500. What do I do? Oh yeah, it's silver. Oh yeah, platinum. Why is it 1/3? Platinum was supposed to be more expensive. How come it's so cheap? Well, I'm going to buy platinum. And I think that's what we are partially seeing now. And because we are seeing the movement up in platinum prices, people are starting to get that fear of missing out a little bit. Because I've definitely seen so much more demand over the last 10 days from investors and inquiries that there is a real push up. So it is exciting time for platinum.
Thank you, Greg. And also people are discussing about the shortage of the supply. So Trevor, in your view, what are the major challenges for the supply of platinum in the futures?
Thanks, Weibin. As I mentioned, the supply of platinum comes from two main sources, mine supply as well as recycled supply. I think what may have also been forgotten is that just after COVID, there was the semiconductor chip shortage crisis. And as a result, the automakers couldn't meet the demand for new vehicles. Now, there were over 30 million vehicles that just were not produced. So those 30 million new vehicles that would have gone into the market didn't. And that just meant that people had to continue to drive cars longer. The price of second-hand cars more than doubled. And as a result, that flow of end-of-life vehicles has dried up. So recycled supply has dried up. And then on the mine supply, obviously the price of palladium and rhodium gave the mining companies very healthy margins over a sort of a 2 to 3 year period. But as rhodium and palladium prices came down, their margins went from about 60% down to 0 in 7 months. So that causes a major adjustment in a mining company. Fortunately, the basket price of platinum, palladium, rhodium, iridium, ruthenium stayed fairly constant for the last 18 months. So the miners were able to restructure. They all cut their capital programs, lost a lot of employees. But they're marginally profitable at the moment. But in mining, inflation in South Africa is extremely high. So they remain under pressure. And the other thing is that both demand and supply are pretty inelastic. So for the mining companies to increase output, even if platinum were to sit at $2,000 an ounce, it would probably take those mining companies the best part of 2 years to make meaningful inroads to increase the supply. So you've got a situation where really your above ground stock, investment demand, and some jewelry is really where the supply is going to need to come from. So that's why investors are finding it very interesting. And Gregor mentioned the ETFs typically would be popular. I think in the first 14 days of June, we saw an additional 110,000 ounces go into the platinum ETFs. So I think it certainly feels like it's got legs, Weibin.
Okay,
Thanks.
thank you, Trevor. So I think WPIC also have been developing the Japanese platinum investment market. So I think at this moment, I think Bruce, so what is your view that for the market development initiative required in Japan to grow the demand?
Well, I think we are really trying to cultivate more interest into platinum because, well, one thing, gold is too high, right? So that could be a very good reason to buy platinum, to invest into platinum. And the platinum accumulation players also, they will be much happier to have platinum platinum investment, the balances on their book because the lease rate is so high. I mean, gold lease rate is almost nothing, but while the platinum lease rate to 20%. So there's a very good the synergy for them that to promote platinum sales, and also the investor who thinks that gold is already too high, they cannot touch. But platinum, yeah, yes, of course, and silver as well. But platinum is more valuable than gold and than silver, and used to be more valuable than gold. So I think that we can talk this way to the investors and cultivate more investment interest into Japanese investors.
Actually, just to build on that, Bruce, interestingly, we have a partnership with Mitsubishi in Japan. They were the only physically backed platinum ETF in Japan. And that ETF had sat at about 10,000 ounces for about 4 or 5 years. And suddenly, with a bit of initiative and interest, it went from 10,000 ounces up to 110,000. And when Mitsubishi looked at the share register, what was fascinating is that 80% of the people that bought those 100,000 ounces were either from the medical industry or the petroleum industry or the automotive industry, where they knew what platinum did in their industry, and they knew it was valuable, and they accumulated it. So what we do know in Japan is that there's a very strong brand awareness because of platinum jewelry over many decades, but also a little bit of advertising to remind the Japanese population that platinum is used in industrial applications, fuel cell electric vehicles, and the hydrogen economy. I think that will create a huge amount of awareness and build on the points that Bruce raised. Thank you.
Thank you, Trevor. Thank you, Bruce. I think we have a couple minutes left. If there are any questions from the audience.
Any questions from the floor? Yeah. We will not go for Slido. We will have the mics passing around. Any questions?
Well, there was a prize. It was a platinum, coin for the first question asked, but it's that really? Ship has sailed.
But I think we need more refiners doing platinum bars because the numbers are really low. I mean, the amount of bullion out there. Why shouldn't platinum be 10% of the metal mix? And I mean, for us, I always thought that 20,000 ounces that we're holding is very, very little. But if you're telling me an ETF has 10,000 ounces, suddenly we don't think we're so little after all.
That's interesting. Yeah, absolutely.
Yes.
邓总你好，我是来自深圳的那个谭忠勇。我记得2019年，你们世界那个铂金协会去深圳搞那个铂金花布的时候，我记得那一年呢，我记得很清楚。然后几年过去了，我是从那个先做黄金， 从1700到3500，这个我是见到了。那现在这个铂金我是在3个月，因为朋友代买，这个不到1个月的时间，这个铂金涨了20%嘛。我想问一下这个专家，未来这个铂金的这个涨势啊，会不会能够就是比这个黄金的涨势会更好？谢谢。
Okay, I think the gentleman asked in the future if the price performance for platinum will be much better than gold. Anyone can answer the question? Bruce? Greg?
I hope so. But yes, well, it's difficult to answer because gold has, every reason to be bought. But one thing, that platinum is still very, very cheap. So if the investors in the world looking at that way, then I think platinum have very good room to go up from here, like 2,000 or even 2,500. I am quite bullish on platinum.
Greg?
I bought a bit of platinum today, so I think if you have patience, I don't think you can do much wrong buying some platinum.
Yes, I agree, because I talked to an analyst this morning. I think his opinion is that the resistance is already broken for the 1100s. I think the next one could be 1400 or 1500s.
It seems to me that the people buying platinum are industry experts which understand there is not much platinum. And once more people start realizing, oh, there's actually so little, and oh, it's so cheap, and somebody moves a few $1 million in platinum and they find out, oh, we cannot get the bars. What do you mean you cannot get the bars? Oh, well, let me buy 10 million then. I mean, I think that's a little bit how investors think. So it seems like there can be a small amount of money flowing into the physical platinum market, and you will suddenly, start seeing serious supply constraints, and that should push the price up higher, I think. So not much can go wrong, I think.
Yeah, I think people need to remember that there's only 220 tons production each year from both primary supply and the recycling. But gold is 4,000 tons. And also, 90% of the platinum have been used in automotive, in the industrial, and in jewelry. I mean, the amount available for investment is only roughly 10%. So the market is tight, have a reason for tightness.
So as an organization, we can't forecast price or specifically comment on that. However, in commodity markets, and the logic of commodity markets is that when prices go up, two things happen. One is you get more supply because the miners can make more money and they'll produce more. Now, in the case of platinum, it's very difficult for the miners to produce more. And the second thing is that if the price does go up, you tend to find demand that is price elastic falls away. Now, what we do know is when platinum in 2008, 2009 was $2,100 an ounce, there were no industrial uses that said, oh, it's too expensive. It still lasts 160,000 kilometers in a car, and it still does everything to reduce energy requirements in many, many industrial processes. So the fact that the demand doesn't fall away at higher prices gives you some confidence that this is likely to be a thing that will respond, as my fellow panelists have mentioned. So thank you.
Thank you. I think that's the end of our section. Thank you for our three speakers, and also thank you for the audience.
Thank you, Weibin. Thank you.
Thank
A big
you.
round of applause.